Welcome to the Bulletproof Cashflow podcast, the go-to place to gain financial freedom through real estate investing. Here we interview investors, mentors, and entrepreneurs who share their secrets and advice to help you build passive income. Let's get into the show.
Hey guys, getting the right financing for your property purchase is one of the most important things you'll do when putting a deal together. Getting the right amount of debt along with the best rates will impact your cash flow and your returns. Today, we go into what you should look for when you're putting a deal together with your biggest partner in your income-producing deal, the bank. If you're new here, my name's Agostino, and I'm a real estate entrepreneur, syndicator, and investor. I like to share my stories, lessons, and advice from my journey in real estate, particularly multifamily real estate. And I enjoy helping others get into the business. I do that through the Bulletproof Cashflow social media channels, through coaching and other online and in-person discussions as well. If you haven't subscribed, do that now by turning on notifications and please leave a comment as well. I'd love to know who you are and what you're up to. Now, for starters, this discussion is centered around income-producing properties. A home is not part of this discussion because a house does not produce cash flow. In fact, it is a way for a bank just to hold on to your money and keep it hostage, and it just means debt equity for you. I'll explain more of that in another video. I'll include the link in the description. But in short, you have all that down payment locked up in a house that you can't invest in, right? So we're talking about income-producing assets here, like a multifamily property, something that gives you cash flow month over month. The reason why banks will partner and bring you money to your deal, that's what they're looking for, is that cash flow. Getting this loan is not just based on your credit, it's also based on the property's income. So while commercial loans are tougher than residential loans, they're not impossible. Now, after you get the deal and you negotiate the price, getting the financing in place becomes key. So each lender is different and they'll adjust their rates depending on the deal and how they feel about the risk level of the entire deal. Conceivably, you already have a banking relationship before you land a deal, and you already have vetted a bank and the ability for them to perform. So doing this work up front with a banking relationship, it will help you in terms of getting any proof you need when you submit the LOI along with your deal too. The bank is going to look for these 4 things to consider when they're doing the deal: your net worth, your personal credit, your personal background for bankruptcy, liens, or criminal background, and your track record with similar assets. And in this case, we're talking multifamily assets. So if you're new to the game, and you're already getting discouraged thinking about that you'll never get into your first deal, don't worry about that. You can always partner with someone that can offset some of these deficiencies, like saying your net worth or your credit or even experience. But in this case, you can give the partner equity in the deal, and the bank will look at their financial background to get the deal done. But if you do this, be sure you're bringing something to the table, other than the deal itself. Maybe you're bringing some sweat equity or property management, or maybe you're doing some other work to improve it. Ultimately, the bank is looking for certainty when it comes to financing a deal. If the bank is comfortable with these 4 things that I mentioned, they'll present various financing options. Many times a bank will offer an interest-only loan with only a few points above Treasury, whatever the Treasury rate is. These days, many investors are getting 4 years of interest only on these larger deals, greater than 100 units. This is great for the great cash flow that you can take. You can improve the property and raise NOI. Again, this all depends on a lender, and you'll need to compare rates to find the best loan and the length of term for your loan too. From there, the leverage will come into play, meaning how much will the bank lend you for your down and what you need for the down payment. So unlike buying and financing a home, we don't care too much about paying down the principal. In this case, a commercial loan on a cash producing property doesn't matter as much as the NOI does. As a property's value appreciates, you keep pushing rents up and keep your expenses in line, you increase overall cash flow. And the cash flow is what covers the debt payment. It gets you passive income. There's no value in paying down and bringing down the principal debt. So, because financing is so important with these types of deals, spending time negotiating financing rather than the price, that's where some degree of focus should be. Lenders will sometimes make you believe that these rates and terms are not negotiable. Now, this is not the case, especially on these bigger deals. This is also why you should vet the bank early and establish a relationship so they can independently underwrite the deal that you're considering and do the legwork to get the best financing they can. The difference of just a quarter of a percentage point in the interest rate can mean the difference between paying thousands of more a year. Anyway, do you have a banking relationship lined up? And are you looking for a lender to back one of your deals now? Let me know in the comments. I'd love to chat with you there. And if you like this content, go ahead and give it a thumbs up and share it. Also, check out the Bulletproof Cashflow podcast on iTunes or Stitcher and subscribe to our YouTube channel as well. And don't forget to hit that bell to get notified when we post new videos there too. If you're looking for more content or coaching, reach out to us at bulletproofcashflow.com. We're working on getting new content to you guys out all the time to help you build success in the world of multifamily. Be great, guys, and I'll talk to you soon.